Blue Man Group.
Zach, I love that.
All right, well, we're live for another episode here. It's June 16th, 2020. And if you haven't already subscribed to our YouTube channel, please do so. Rolland Market Mashup. So, yeah, I mean, today looked like it was going to be a bloodbath, but as soon as the market opened, it looked like the bulls took a stand and looked at it as possibly a big buying opportunity and maybe just a healthy dip. I don't think it made a full 10% correction from the highs last week, but I think it was about 8.5% correction. And then, I mean, the market opened down like 650 points and then just gradually made its way to positive. And then obviously the Fed had their remarks in the afternoon and the market rallied, and it ended up being a pretty massive day, which was crazy. And now the Dow looks like it's set to right now open up almost 800 points, which is awesome. And it just kind of shows that if you did nothing last week when the market went down 6.5% in a day, you're basically just about back to where you were. Obviously, it was a nice buying opportunity, but it's just a good example of not to panic when things get crazy. So, Dad, I'll throw it to you. What are your thoughts on yesterday? What are you looking at for today?
Well, this is why trading is fun, because you came into yesterday saying this is going to be another shit show. Nobody would have been surprised if it was down 1,500 points. And it turned.
I think we all would have been, though. I think we knew this second wave thing was just kind of a fake narrative to kind of fake people out a little.
Yeah,
no one's locking down again, like we talked about yesterday, and the street saw that quickly.
Yeah, well, it was interesting because sometime during the night before yesterday, the market was down close to 1,000 points, I think around 2 a.m., so the beginning of Europe. And from that point on, it was a steady up. So there just wasn't selling pressure. There are people that want to buy this market on any kind of downturn because they're not in it. And
as they should, because as we see it goes up eventually. And now you hear Trump with the infrastructure bill talk. The guy's a marketing savant. He knows how to work it. And you have to think about, it's hard to be on the sidelines hearing stuff like that, because we could be, in for quite a run once the dust settles on the election with the stimulus. If there's another stimulus, I'm very bullish here.
Yeah, one of the things on the stimulus bill, though, I don't think anything's going to get done before the election. The conservatives are not for it. So Trump's base is basically not in favor of what Trump wants to do.
Well, that doesn't matter if he's reelected, because then he doesn't care about supporting people that don't have to vote for him again. So that changes.
Yeah,
when you look at past presidencies, the second go around, the base, the president in office doesn't nearly care as much because they don't need to appease to someone to get a vote again. They're out of office after that.
I think it's important to acknowledge that Trump is not the one who decides if there's another stimulus bill. It needs to be voted out of Congress, so it's completely out of his hands. But also something that I'm starting to realize more and more these last few weeks is how, like this morning, for example, you turn on CNBC and the headline is "Futures Pop on Stimulus Bill Hopes." And at the end of the day, no one knows why the futures pop. And I've realized that you need to have some sort of headline. So it's easy to say that the futures pop because the bulls maybe looked at yesterday as the bottom and the market rallied. And then because the market rallied here, the market rallied overseas. And now it's back to possibly a bull market. You don't need any specific headline to move the market. I don't want to say.
Well, you need the idea of job creations that need to be created.
Well, that's interesting, Mike, because if you look at some of the stats that came out, I noticed that Delta is increasing capacity in a big way by July. There's other airlines that are doing that. That's why Boeing is up so much today. That's why the airlines are up again. Boeing is a big part of the Dow. That kind of takes a life of its own when it starts to move. Apple got another downgrade, another big part of the Dow. And
so it's
quietly, people have been talking about how all the numbers are getting blown out of proportion on the virus. Meanwhile, Florida, if you looked at the numbers, was actually down yesterday, the past 7 days versus the 7 days from yesterday back. So the numbers in Florida are actually not nearly as bad as they're trying to.
Well,
the
the
narrative.
media, they have an agenda, as we all know, and that's gotten blown out of proportion. But that's why the market bounced back quickly. That quick virus fear last week was unfounded. There was a brief period there on Thursday where I think there was actual concern of the uptick and people having to be locked down again. And that seemed like a bluff more than anything.
So anyway, if anybody bought stock in the last 2 days in this downswing, this is, this morning and, before the opening, gave you a chance to make some sales. I don't know if anyone did. I sold a little Boeing because I bought Boeing.
I'm actually getting out of Boeing as we speak. Finally, I'm so sick of that stock.
I sold a little Sabre as it ran up to 930. That may work its way higher, but these are stocks that have kind of been stuck in mud in a way, and this gives you a good opportunity to sell a couple of stocks that just are not performing. Alcoa, I sold a little bit. It got a downgrade from Deutsche Bank today, but the stock's still up, so that's a good opportunity.
That too.
So it's interesting, though, that you're selling right now, because I've almost looked at, and maybe I'm wrong in looking at it this way, I'm looking at this market, and my view on it is you needed some sort of correction because it got too hot too fast. The correction happened, and it gave a chance for people to consolidate some gains. It also gave a chance for people on the sidelines to come through. And my opinion on it now, and it sounds like it's maybe different than yours, is now you can maybe get past where we were last week and break through that and get to new highs. And I've been doing, I kind of look back at what happened with Penn. And on one end, I felt great about my day trading in and out of it. On the other end, I kind of ran the numbers and I was like, you know what? If I never traded out of Penn one time when I started actively day trading when it was at 16 and change, I would have made so much more money just buying and holding. And I've been starting to have more of that mentality through these big swings where, like, the last few days, I loaded up on some stock. And now I look at it like, yeah, I could sell now and take a profit, but are we just knocking on the door of the high from last week? And if we break through, maybe there's room for us to, get even higher. And I don't think the market's a straight line. I'm constantly reminded of that every time I think, oh, this time must be different. This time must be different. At the end of the day, there's massive hedge fund managers that, what I'm starting to realize, have percentage gain goals each year that they need to hit. And when their stocks are allowing them to hit those, they're going to take profits. So there's always going to be people on the selling side because people want to make money and turn the digital numbers on a screen into actual paper cash. So, you're never going to see it.
It's also an election year, Dan. So no matter what, there's no selling off in the sunset until January. There's no way we're just going to be all hunky-dory for the next 6 months.
Right.
There's going to be a ton of turmoil. Guaranteed.
But, there's also there's the core positions that we have, and you don't want to sell. But if you've been trading and then you use the opportunity when the market was down to buy some extra stocks, then you use when there's a big move up in the market like we've had in the last 3 days, an opportunity to sell some of those. Like Penn, I added to Penn, and now I'm peeling it off a little bit. That's a great trading stock, just to
I'm going to pull up
as a buy and a sell because it moves in such high percentages. You can use the airlines.
I've made great money on Penn in and out. I'm thinking about dishing it again. I just don't really.
Well,
I could hold it long term, but I don't know.
When you say, though, you've made good money in and out of Penn, and it looks like we all have. If you look at 3 months,
it's not one of my long-term anchors. I don't look at gaming.
No, I know, but I'm just saying,
like
if you look at the 3 month chart from what happened in March, it's almost been on a straight line up until 30, and then it clearly, went above 30 and then came briefly below 30, and now it's where it is. But at least I know I would have made a hell of a lot more money on Penn buying and holding than trading in and out of it. And trading in and out of it did work, but that just is an example of a stock that if you did trade in and out of it, there were times you were out of it, missing out on 20, 30, 40% gains. Same with DraftKings, which yesterday was off to the races, up like 13%. I don't even really know.
See, I see that, and I want nothing to do with DraftKings after seeing yesterday. I'm waiting until shit hits the fan with them. And
But Mark, you
here's
say
what-
it's 25. So what price are you looking to get in?
when all the dumb Davey day trader people lose all their cash, because right now DraftKings is all fluff. No, we don't have sports. Baseball's not back. We're talking about summer hockey leagues. I just don't buy into this crap. I love DraftKings as a long-term play, but not the way it's acting now. I don't like holding something long-term that's a roller coaster every day. That's why I like the getting in and out of stocks like that.
Well, here's the thing with DraftKings. Football season is going to happen. They make millions of dollars every Sunday when it's fantasy football. They make, I think, a 17% return on when you put in $20 to play fantasy football. And
so the move there maybe is aggressive put options, where we talked about, Dan, you were laying that out yesterday. I feel more comfortable with the DraftKings with out of the money puts.
Yeah, well, the thing is, though, like we talked about with put options, you want to do it when these stocks are in the shitter. And right now, DraftKings is working towards an all-time high.
Well, no, I know, but if you look months out, I'm sure there's some great values that.
But the market
is discount.
Yeah, but the market is looking months out. That's why the stock is trading where it's trading.
And also, this is not like a Hertz where it's not a roller coaster. It's been a roller coaster on the up and up. And a lot of that is because, there's a lot of people that look at it like different states are starting to legalize gambling, which some of them already have. And DraftKings goes beyond sports betting. They have casino games in their app too.
That's right.
But how much of that's already baked in? The pent-up demand, everyone's getting back.
I said a few weeks ago, and I'm going to stand by this, and I know this is a big statement to make, but I almost look at, and this is a slightly different comparison, so bear with me here, but what DraftKings is to the casino stocks, I look at as what Amazon is to retail. And don't get me wrong, I don't look at casino stocks as retail in the sense that they're going to go under because they provide experiences. But when you look at the reach that DraftKings has and how accessible it is, whether or not you're in a casino or you're not in a casino, I think DraftKings will eventually be a higher market cap worth stock than Las Vegas Sands, which right now is the number one casino stock on the street. And
wouldn't a casino stock just roll up DraftKings?
Okay, well, if that's the case, that's another reason to be in. But I don't think that they would necessarily even be able to afford it. I mean, Las Vegas Sands is about 3 times the market cap of DraftKings. They would have to pay an arm and a leg right now to get DraftKings out of that race because they're on a trajectory that to me looks like at some point they're going to be the new sheriff in town when it comes to gaming.
I don't see what you're talking about, Dan. I think more likely is a roll-up. I don't look at DraftKings as Amazon. I look at them as a takeover target for an MGM. Like I don't see how one of those big casino conglomerates allows them to just be supplanted with market cap. Like I just can't envision that.
They're already worth more than MGM and a lot of these other casino stocks. So for anyone to take them out, it would basically have to be Las Vegas Sands.
Let me go the other direction. I think Danny's got a point here that, the brick and mortar casinos are an experience to enjoy, unlike going to a mall, which some people do consider an experience. Las Vegas, Macau is an exciting thing you cannot get online. But, with the virus and everything else, people will do what they can do. And DraftKings is a great alternative. And, it wouldn't surprise me if a DraftKings eventually bought a Wynn or an MGM. Who knows? It could go the other way.
Did you guys happen to, just to change gears here, catch the CEO of Nikola? Or I don't know if I'm pronouncing that right, but the quote-unquote Tesla competitor. He was on CNBC.
Yeah, I saw him. That guy's out of his mind.
Seeing him on that interview made me not want to go near the stock. There's no way.
No,
that
CNHI is the play there, not NKLA.
Which one, Mike?
CNHI. I bought some last week.
And could you talk about kind of what that is a little?
I mean, they're the largest investor in NKLA. They made a huge investment in them, and they're just, when you look at the scheme of things of what they're doing, it just seems to be a much safer bet on even if NKLA doesn't have that much success, they're more of a long-term runway. I would not bet on NKLA the way they've jumped up against Tesla. A lot of that is just off of what Elon Musk is up to. The fact that NKLA, and I know so many people that have just jumped on that stock, they're like, oh, it's up huge. This is great. I would not touch that at all.
Yeah, if anything, it's a stock I'd feel better about shorting than buying. But yeah, Mike, the CNHI company looks interesting, especially when you look at the 1-year chart. I'll read the description real quick. The company's engaged in the design, production, marketing, sale, and financing of agricultural and construction equipment, commercial vehicles, buses, and specialty vehicles for firefighting, defense, and other uses, blah, 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 blah. So they basically make equipment. So they're not necessarily relying on Nikola to work out. That's clearly not their only company.
But they put a huge amount of money in them. I think it was like a week and a half ago. So clearly, if they do work out, this company will benefit greatly, but it's nowhere near as risky as just jumping in NKLA, which is basically, it's like, oh, Tesla's killing it. We're here now. That's the vibe I got from this guy. And it's like, good luck going against Musk.
Based on how Dad reads charts, I mean, Bob, correct me if I'm wrong here. It looks like this chart could possibly go back up to 10 if it gets back in gear.
Yeah, no, that's how I would look at it that way. Maybe not quite 10, but
9 and change.
Yeah, it's not a big chart.
Another interesting thing I saw on the news this morning that, normally this would be headlines, but just because I know Bob brought up
IBN.
Yeah, which is the Indian bank. So this morning,
I've seen them a lot in the news.
Yeah, so this morning I saw, there's been a kind of an ongoing conflict, and I was reading up on it a little just to educate myself on it because I didn't know too much about it, between China and India for years now. And for the first time in the last 4 decades, it turned into a few deaths where there was like a military gunfight at the border between India and China that resulted in 3 Indian soldiers dying. This happened yesterday. And if you read up on it, it's basically just because of everything happening with China trying to expand their military throughout all of Asia and everything that they're doing in the South China Sea. And they're upset that India is starting to work more with the United States. Basically, everything I read in the article, I was reading a Bloomberg article about it this morning, kind of, to me, hinted at India is going to slowly replace China as the main country that we get our manufacturing done, and what we've used China for in the past, 20 years could slowly shift to India, and that obviously really scares China. And I saw that, and I know, Mike, you were talking about the election earlier, and this is obviously an election year, and I haven't had time to look back at what the market does during election years. I know it's usually choppy, but I just wonder at some point, is this going to spook investors out, or will it not at all? Because maybe behind closed doors, investors like the idea of us having a stronger relationship with India and kicking China into the curb. Dad, what do you think about this?
No, I think over time we will do more and more with India. I know Apple's been trying to get a big inroad into India, and it's going to be an economic type of game as far as getting involved with India. The politics are more in line with the United States, obviously, than communism. So India is going to be interesting for decades to come.
I mean, they're a much better partner. At the end of the day, India is set up to be a great partner of ours for decades. China is not. And Dan, I love where your head's at with that. You would think with IBN that puts a lot of focus on them.
Well, I guess my question,
long-term story, right?
and I guess my question is, like, when you look at the stocks, the Chinese stocks that have really, some of them which have exploded over the years due to our trade relationship with China, let's say that was slowly replaced, and maybe not even so slowly, maybe quickly replaced with India. Dad, are there other names other than IBM that you look for that could be potential big winners?
Well, there's been great names in India, not so much in the banks. There are other banks, but Dr. Reddy Labs, which you probably know the name, RD.
What is it? Say it again.
Dr. Reddy Labs,
What's the ticker?
RDY. If you look at that, they're involved in the COVID to a certain degree, and I think there was an agreement with Gilead today. I mean, this stock has been on a tear, but this is more of a drug. It would be in the drug headlines, and you're talking more of an economy-driven stock. So you would want to, there are Indian funds. I don't remember the symbols anymore. But you could buy a general India fund that invests in many of the companies that would do very, very well if the U.S. is doing more and more with India.
So,
and how about when we look at India, what about the 5G push? Is there a stock that we could take advantage of with that?
I'm sure there is. I don't know what it would be, though.
So we'll
pull up the stock ERIC. Our cousin will love this. ERIC.
Okay, and for our viewers, we will try and do a little homework here because I'm myself curious. I'm possibly throwing some of my money into the Indian economy. So we'll try and have a little bit more information about all this. Eric, Mike, what's your knowledge on Eric? What does this company do? I see
it's the 5G movement. These guys, I believe they're a Scandinavian company.
It's a Swedish company. I used to trade the stock back in my Wall Street days. It was
yeah, they're set up for what's coming here. They've been doing a lot of moves in 5G. I know it's still a lot of talk and not ops, but it's coming. And they seem to be set up on the world stage to be a powerhouse for this. So if you want to bet on the 5G movement and be at the forefront before you hear all these analysts dumping stuff into it, this could be one to look at.
Yeah, but what's difficult on a day like today? Right now it looks like we're going to be up 900 to buy stocks here. You want to wait for it to cool off. It's really difficult to go long here. The one thing that is happening is the stay-at-home stocks have started to go down again. So that might be something to think about. Did we lose Mike? I'm not sure if anyone is even on here right now. Zoom is now trading at 236. It closed 239. I'd be looking to short that again up here. It's dangerous, but it's possible it could work its way back into the 220 level again. So that's the one thing I might think about doing here. But a lot of these stay-at-home stocks have completely stopped going up, and it's in their tracks with the market going up like this and a little bit more talk of good things from the COVID virus. Boeing now trading at 209. You can't get into stocks when they're up 18 or 19 points on an opening. So, if you have any profits in any of these names that have moved, I would say anything over 10%, it might be worth taking a little bit off. The other interesting thing to look at is the banks are up quite a bit today, but they're still not back at levels that they were at before the big fall on Thursday. So on any fall, I still like Citibank and JP Morgan as solid names to get in. And let's see what else looks interesting here. there was an upgrade on Intel and there was a downgrade on Intel, so that might be something that may not have the move that some of these other names might have. I think I lost all you guys. I don't know if you.
Yeah, we're back. Dan was backstage.
Yeah. I just mentioned that the stay-at-home stocks are starting to come down with the market moving this much, and I think Zoom is a good short again. It's trading around 236, off a little bit. And the banks have not gotten to the point that they were at on Wednesday. So on any pullback in this market, I think they're still okay. Citibank, JP Morgan.
This opening is looking to be something special here. I mean, the market right now looks to be open almost 1,000 points. I'm getting my fingers ready to click some buttons here and make some trades, hopefully. But at the same time, I might just sit back and watch because that strategy's been working well for me. I bought a little chew yesterday on Friday, or not Friday, Thursday, whenever the market, Friday at the lows, I added to Bristol Myers position, and a stock that I think's been looking interesting is Waste Management, because I thought that they were looking interesting last week, and then this correction happened, so they're down about 10% from where I originally liked them. And you look at, like, if the infrastructure stimulus bill happens, and you look at a company that could really benefit from that, but doesn't rely on that happening, is going to just benefit from the economy coming back to normal anyway. I like Waste Management. I don't own any. I'm not going to buy any because I own as much as I want to own right now, and I have a lot of different stocks. And if anything, I own more stocks than I want. I'd like to, I have like 30 different companies right now I'm pretty heavily invested in. I'd love to trim that back to like 22. I'm not in a rush to do it, but normally I like to just hold less companies than that. That's just my own opinion. I mean, Dad, do you think the market is going to hold this open, or what does your gut tell you?
My gut tells me anytime the market opens up this much, it rarely stays up here. It comes in, and then you have to make a decision on whether up 600 or so or up 500 is the bottom for the day. But I would not be buying on the opening. I don't like doing that.
So you're selling on the open. It sounds like
I've been selling all morning. So far, everything I've sold is higher, so that's been wrong.
Yeah. So normally,
you never know.
A lot of people have been like texting me about the extended hours trading, and Dad, I don't know if you want to talk a little bit about it. It seems like it allows you to sell stock at higher prices than you could do during the market. And
there's less volume. I was talking to Nick about that yesterday. He said it's hard for him to get orders filled. Less people are trading, but you should still. I've had no problem hitting limit orders.
Yeah, you have to put limits. You must put limits in if you're doing extended volume. You could usually move stocks at good levels when you take Sabre, SABR. This stock tends to not trade as high in the real market as it does in the pre-market. I don't know why that is, but it seems to have been that way, since I started looking at Sabre. And there are stocks that are like that. There's heavy selling volume in the regular trading, and you don't seem to see it in the pre-market. But most stocks, wherever they trade in the pre-market, near the opening is where they're going to open.
And before we do our picks of the day, something that you taught me that I used to not even understand, but now it's the only thing I do. Even during the open hours of the market, I typically will only buy or sell stock when I set limits. If you do it with market, a lot of times you can get screwed because if people have bids in for way lower than the prices and you do a market sale and you think you're selling high, a lot of times you get blindsided and you end up selling for way lower than where the market's at. Same with buying. If you think you're buying, you end up buying way higher than you were intending on buying.
Oh, yeah. Always set limits. Never do market orders when you're trading, no matter what.
And for day trading, it almost makes it easier, where something that I've done a lot of is if you kind of sit back and let the first hour do what it does, the markets will oftentimes set some lows, set some highs, and then you can use those ranges.
Keep emotions out of it, like Dad taught us. You don't want to be staring at it because then you'll make a different decision that's not technical.
So I'll start with the pick of the day. I know I've been talking about them a lot on here. Take-Two, TTWO. The CEO was on the closing bell yesterday, and it made me want to buy even more, even though I'm comfortable with the position I have. They obviously make a lot of the games for PlayStation. They own the Grand Theft Auto franchise. They just released a new Grand Theft Auto. They have a lot in their pipeline. The CEO said that due to the pandemic, their growth is more than double what they were laying out for their projections. And all statistics point to that growth not going away at all. You see guys like Dan Katz at Barstool playing video game franchises with followings of tens of thousands of people. I think the live streaming.
Yeah, Twitch is a huge deal for them.
Yeah, I think the live streaming of video games is beginning, and I think video games are making a big comeback, and I like Take-Two. So TTWO, I like them to 150.
Dad?
Yeah, I mentioned while you guys were off the air Zoom, and I think it's a good short up here. I tried shorting it once and it worked. It feels like it's run its course for now. Not for the faint of heart, but I think Zoom down to the 220 to 225 level is pretty reasonable. Short.
And I after hours yesterday, I picked up some CVS and Chewy. I know CVS I talked about last week. They just announced a partnership with DoorDash, who we all hate, but they're doing delivery with them non-RX, so not actually the pharmacy. I'm sure that's coming. We're going to try to figure out how to get in that in the Lodell universe too, but I think CVS is a phenomenal buy here. I'll be holding that for a while. I think they're anchored for a lot with healthcare delivery, where we're heading with telemedicine, not to mention convenience items. I'm also there almost every day. And Chewy, I liked when it dipped under 47. It was hard for me to refrain there. I've been bullish on them for a while. Wanted to wait till they were off their all-time highs after going into earnings. So that's where I'm at right now.
Nice. And the last thing I'll say is I did do a little bit of research on the thing with Hertz, with them offering like another $1 billion of shares or whatever. And I think it's important to recognize that part of that offering, they had to put in fine writing about 5 different times through the press release that the shares are going to be worthless. Those shares are most likely going to be worth $0, and they're clearly trying to take advantage of the people that don't do that homework. So short Hertz. Eventually it's going to 0, but don't short Hertz. It's risky, but that stock's going to 0. So, all right.
Let's make some money. Take care, everyone.